P.K. Gupta. Mr. P.K. Gupta is the Managing Director of State Bank of India for retail banking and latest initiatives in payments and digital banking. Prior to this, Mr. Gupta was the Managing Director looking after compliance and risk in the bank. He held very important position in SBI as MD, CEO, CFO in various functions, namely merchant banking, treasury operations, private equity fund, including critical position abroad. Mr. Gupta was a member of the MSME Experts Committee constituted by Reserve Bank of India. Ladies and gentlemen, please put your hands together for Mr. P.K. Gupta.
I now request Mr. P.K. Gupta to kindly come on the center stage and share his vision on the theme subject of achieving the $5 trillion economy with this wonderful gathering here at the IMA Conclave 2020. Mr. P.K. Gupta, for you.
Good afternoon. Okay. Fine. Yeah, good afternoon to all of you. As you all aware that this vision of 5 trillion economy was articulated first in the budget last year. The reason why the government felt that we could go towards a 5 trillion economy was because India has been the fastest growing large economy in the world. We are the 6th largest economy. Some of the structural reforms that had been done in the recent past actually led the government to believe that we could now vision towards moving towards a 5 trillion economy. The country has been maintaining fiscal discipline for the last many years. Our external sector position has been very, very sound. We have been getting very good inflows in terms of FDI also. This particular vision involved three-pronged strategy. One was infrastructure, second is digital economy, and the third is on the MSME sector. So what basically this vision involves is to take three particular steps. One is to kickstart investment in the economy. Second is to stimulate demand. So I think going forward, we'll discuss what happens first, whether the investment happens first or the demand happens first. And the third, basically the objective of the government was the ease of doing business actually. So basically the intention is that if we can stimulate demand, we can kickstart investment and enable ease of doing business. So these three things can lead to the country going towards a 5 trillion economy. Let me just give you a little bit background actually how the economy has been growing actually. So if you see from this chart, the first 1 trillion for the economy happened in 57 years. And it became a 2 trillion economy in the next 7 years. The third trillion is expected will take 5 years. The latest numbers are around 2.8, but I think any time we should be a $3 trillion economy. It is expected that the 4 trillion will take next 3 years, and we should get to a 5 trillion economy in 2 years thereafter. So the roadmap that was laid down as a vision for the government was that by 2024-25, we should be a 5 trillion economy. So while it's taken us a lot of years in the past to get to add every $1 trillion to our economy, but going forward, every $1 trillion should not take too much time. In 2 to 3 years, we should be able to add $1 trillion to our economy. Now, what has been the experience? So if you look at the international experience, there have been 18 economies, again from the emerging markets, which have consistently grown very well in the past many years. So there are 7 economies which have grown at growth rate of more than 3.5% for 50 years. So this included most of the Far East economies like China, Hong Kong, South Korea, Singapore, Malaysia, Indonesia, Thailand. So they have consistently grown at over 3.5%. So they're practically not only emerging, they're almost emerged economies. The other economies which have not been growing very fast, but they have grown very well in the last 20 years. And for the last 20 years, their average growth rate has been over 50%, 55%, and India has been one of these economies. Now, if you look at how does it compare actually, what is the position of each of these larger economies? Now, China, if you look at China, China has been growing at 7.3% for the last 50 years. China's GDP share in the world economy is 13%. But in the population, they have a share of 19%. So which means that they are not, slightly lesser than the world average, but they are doing very well. The long-term performers, that economies like Indonesia, Malaysia, their CAGR for the last 50 years has been 4.7%. Their GDP share in the world economy is 5%, and they have a population of 6%. Now, the economies which have recently started doing well, and this includes India, their CAGR for the last 20 years, so this is not 50 years, this is 20-year data, is about 6%. Again, see the difference here. They have 4% of the world GDP, but they have 22% of the world's population. So which means that these are the economies where the per capita income continues to be very low, but they have been growing much better than the other economies. So the high income economies have been growing at around 2%. Their GDP share is 53%, but they have a population of only 13%. And these other emerging economies are mostly the African countries. They, of course, have not been growing that well. So again, if you look at the experience of who have actually done very well in the past, so I think for a country like us, China has to be the example and how China has grown in the past. Now, if you look at how the Chinese economy has grown, that is the chart on the left-hand side, bottom. Between 1996 to 2000, their growth rate was only 7%. So since 2000, they have been growing much better. 2001 to 2005, they grew by 11.3%. But their real growth picked up in 2006-10. At 17.3% they grew. Even though it has come down, but still they are growing at rates which is much better than many of the even smaller economies. Again, the transformation, even in the Chinese economy, happened because of the investment they made in the infrastructure. And then they capitalized on those investments in the infrastructure, moved towards a consumption-led economy and the digital economy. The China, again, on the digital front has done wonderful work. I mean, if you ever visit China, you will actually find that how the digital in China has transformed that economy also. So they have been doubling their GDP for 4 years, and in the last 8 years, they have quadrupled. Now, if you look at where India is as compared to China, I think we are where they were about 20 years back, actually. And the rate at which they have grown, I think we need to move somewhere closer to what they have been doing. One of the factors which has been very important for the China's growth has been the large companies. In India, we do talk a lot about MSME. The government also has been talking. MSMEs do contribute a lot to the overall economic growth. But I think sometimes we underestimate the contribution of the large corporations. Now, if you look at this chart, India actually had much larger number of large corporates. But suddenly, the China overtook us. Somewhere in 2010, the number of large corporates' contribution to the China's economy has actually grown. And see the diversion that has taken place in the last 2-3 years. While in India, the contribution of large corporates has been generally either at the same level or even declining a little bit. But in China, they have started contributing very significantly to the growth of the GDP of China. So this, I don't know whether you have actually seen this earlier. So how do we get to a 5 trillion economy by 2024-25 actually? What are the various sectors of the economy that will contribute to this 5 trillion economy? Agriculture, from about 400 million, is expected to go to 700 million. The share in the total GDP from 16%, it is expected will come down to 14%. The industry, and within industry, the share of manufacturing. I think in India, we have been talking for a long time about the share of manufacturing. We have not been able to ramp up very significantly. But if India has to grow, I think this is a sector which has to grow. without which the entire consumption and the investment cycle cannot really take off. The contribution of services to our industry has been 54%. And we believe that this will continue from 1.4 trillion today. Will go to 2.7 trillion by 2024-25. The share will remain around 55%. This has to contribute. But again, the general point in this is that for the services and agriculture also to grow, the industry has to grow. Without industry, this growth cannot happen. What the government has been budgeting is that agriculture is expected to grow by about 10%, industry has to grow by around 14.5%, and services by around 14%. Then only this vision of 5 trillion economy can be achieved. Now, from where this will happen actually? So the gross fixed capital formation has to grow up very substantially from where we are, from about 29-30% to 35-36%. Then only we will be able to achieve this. Exports contribution has to go up from 20 to 25%, and imports have to move from 23 to 30%. You know, we have been talking about the investment and the consumption. I think the general question is that what happens first? It's almost like a chicken and egg kind of a story. Okay, so whether the investment can happen only when there is a demand, and demand will happen only when the investments are happening at the same time. I think the challenge before the government also at this point of time is to see how we can actually, get some private sector investment to happen, and then only the growth can happen. We have been seeing a lot of investment happening from the government side on the infrastructure, on various other sectors. But I think the government alone will not be able to kickstart this, the total revival in the economy. For this, the private sector investment also has to happen. Now again, if you look at the economy, so what are the new growth drivers? So why even the government felt confident that we can start looking at a $5 trillion economy? India's stack based on Aadhaar, I think that has been one of the biggest enabler. This will allow the entire digitization in the economy. The UPI, eKYC, eSign, DigiLocker, all of them are very important from the bank's point of view also, because this is what enables us to do more financial inclusion, onboard more customers, provide banking services to a larger percentage of the population in the country. E-governance drive is again part of the digitization drive which the government has. But again, in terms of Aadhaar, we have 1.22 billion Aadhaar. So most of the population in the country has an Aadhaar now, which enables the banks to open their accounts. As you know that the Jan Dhan campaign which the government had launched, 37 crore new accounts got opened, 60% of them in the rural and semi-urban areas. So in terms of financial inclusion, has been the biggest enabler. And about 87 accounts are now linked with Aadhaar. This is one reason why the government subsidy schemes or DBT, direct transfers, are happening. And this will enable a lot more financial inclusion going forward also. What is also happening in the country is platformization and the growth of the gig economy. So there are new business models that are emerging. The traditional business models are undergoing a lot of change. Uber is one example through which the business models are changing. End-to-end digital value chains. So people earlier used to operate in silos. I think that is changed in the economy. So you have complete supply chain, even from the bank's point of view also. So these days we don't look at one particular activity being financed. So what we look at is the entire value chain being financed actually from manufacturer to the distributor to the ultimate retailer and to the customer. So how we can finance this entire value chain is something which we have also been looking at. MSMEs has been a focus, and India is a country of MSMEs, I think, and without the growth of MSMEs, India will not be able to achieve. A lot of initiatives are there. As was said in the introduction also, I was a part of the MSME committee. There are a lot of recommendations were made. I understand a lot of them are still under discussion at the government various levels. Fintech players, again, have been playing a very, very important role. From the bank's point of view, they do give us a lot of competition also. But I think whatever innovation they bring also is good for the economy. P2P lending, in disintermediation, where even the bank's roles can be cut down a little bit, would help the country to grow. Last mile delivery channels in digital DC network, like for example, a bank like SBI itself, we have about 59,000 business correspondent outlets through which the banking services are provided. So if you look at in terms of the network that the bank has, we have 22,000 branches, we have about 59,000 ATMs, but more importantly, we have 59,000 business correspondents which are spread across the country. The places where probably a branch is not viable, but through business correspondents, we are able to provide banking services there. A lot of other developments that are happening, eNAM, GEM, I don't know how many of you are aware of the GEM portal. This is a government procurement portal where most of the government procurements are moved to that portal. So which means that a small MSME located anywhere in the country who wants to sell to the government can go and register on the portal and sell to the government departments. I think many of you are from the business, you know how difficult it is normally to approach a government department and sell a product actually. But now there is a complete democratization that has happened. So which means any MSME seller can actually approach government departments and sell. It's ultimately a question of pricing there. So some of this I've already said that this is how the government has been trying to drive this entire 5 trillion economy insofar as the banking sector is concerned. PMJDY, some 37 crore accounts have been opened. DBT, instead of giving subsidy for each product differently, let the subsidies go through the direct accounts of the beneficiaries rather than it is being attached to the pricing of the products actually. So this is very successful so far in wherever it has been done. I think all of you have experienced in case of the LPG gas cylinders. The attempt is that they should move most of the subsidies through the DBT route rather than subsidizing the pricing. The bankruptcy code has been a huge success. I think this has given a lot of confidence to the banks also. You have seen large recoveries happening, large number of cases getting settled through the IBC process. So this again makes lending much easier as far as the banks are concerned. GST has been another game changer. RERA again is another development that has happened, particularly very good from the banking sector point of view, because earlier whenever we had to do a loan, we need to do full due diligence. Even after due diligence, you are never sure actually about the project, about the clearances, about various other things that are associated with that. But with the coming in RERA, I think that risk for the banks in lending for the housing sector have actually come down very substantially, whether it is giving a housing loan to an individual or even giving loans to a builder also. So demonetization again has changed the economy. Tax, again, there are some reforms that have happened. So if you look at in terms of the major reforms that have happened, which have enabled the ease of doing business improvement. As you know that from almost 140 in the ranking, now we are down to 63rd. So this huge change in the ease of doing business ranking that has happened for the country happened mainly because of the 6 developments that have happened in the recent past. Construction permits, faster electricity connection, digitization of cross-border trade, GST, IBC, as I said, has been a very, very big game changer, and contract enforcement. So these are the 5 countries which have been actually investing very big, and they are the ones who are responsible for most of the FDI that is coming in actually. And these sectors we believe would be the one where a lot of investment will happen going forward. Automotives, electronic systems, renewable energy, roadways, highways, pharmaceutical and food processing. So let me little talk about how the banks actually contribute actually. So as I mentioned in the beginning, so there are basically 3 pillars where the banks we believe have a very important role to play. One is the infrastructure financing. As we all agree that the country needs a lot of investment in infrastructure. Our infrastructure is nothing when you compare with most of the advanced countries. Lot of investment happened in the years 2006 to 2010 in the infrastructure sector. But if you know that the banks face a lot of issues also, I think the current NPAs that the bank face also to a very large extent on account of the infrastructure development that happened. I think maybe, there are lessons that we have all learnt. Going forward, the infrastructure investment will be required, but probably the banks will be able to do it in a much more risk mitigated manner. I think what happened in the past was there are issues regarding environmental clearances, there are issues regarding land acquisition, there are issues regarding governmental clearances also. As you know that there were licenses that were given that ultimately could not be honored either because of some court rulings or because of the change in the governments also. But there again there is some contribution which is required to be made by the government to see that once the things are in place, licenses are given, clearances are given, so there is no going back on that also. But at the same time, from the private sector, I think the expectation is that they need to invest, and they need to invest a lot of capital. And that is where the challenge is actually, because still we believe that there are a lot of large private sector houses which are not able to invest quite substantially. But that investment has to happen. The government alone cannot take care of all the infrastructure needs of the country. Credit growth in the country has been a little low. I think this year itself we are seeing the growth at a rate somewhere below 8% also. So I think if a credit grows at 8%, so I don't think we'll be able to reach that 5 trillion economy by 2024-25. So this growth rate has to go up. So from the bank side, what we are seeing is we see a lot of deposits coming in. The deposit rate growth for the banks is over 10%, but the credit growth is only 8%. So with the result, you now have a situation that the banks are sitting on excess liquidity of almost 3 lakh crore. So over 3 lakh crore is the money which the banks actually go and park with RBI on a daily basis. So this money is available for investment. So as a bank, I think we are very keen that we should be able to invest. As a bank, we can make profit only when we invest the money, because when we put the money with RBI, we don't even get the interest which we pay to the depositors. So it is very important for the economy, for the revival to happen, that this gets utilized for productive assets, this goes on to kickstart the economy, and this leads the path of investment and consumption. Digitization, I think, is the second important part. The banks have been playing a very important role. The government has done a lot of things. We have seen a lot of things happening also. I think the recent initiative of the government in terms of removing MDR for the payments on the RuPay cards and the UPI payments. I think the payment systems, the more robust, more stable it becomes, it enables all the transactions to happen in a seamless manner without any cost to the users. That will again enable the transactions to happen. The third part, of course, is the financial inclusion. I've already talked about that. So again, on the digitization, I think the landscape, how it is changing is, there is the AI, artificial intelligence getting used, robotics, there is a big data, blockchain, lot of innovation that is happening. I think how do we start using all of this in our day-to-day decision making, and how do we take benefits out of that is something that we will have to do. So let me end by saying that from the bank side, I think there is a lot of contribution that has already been made, and the banks are ready to make much more contribution. But our only expectation is we want the private sector to come forward, start more projects, take all the money that the banks have available with them, and use it for productive uses. Thank you.